Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices. Seeing a bit of a decline here on Friday and week over week modestly, but holding the range. The range we've seen most recently established at 1330 to 1350. Recall not too long ago we did push above that 1350 line briefly and back down below it, but we're kind of still within that comfort range, and I don't see gold sellers coming in and fearing a major sell-off. Yeah, we had a bit of a hiccup, and I think a lot of the technicals at that 1350 line may have gotten a little blurry when we went up and back through it, but 1330 is still a relatively strong support line. Holding that range is key, and going out around 1340 this week will keep us well above that. Going into the weekend, I don't see any reasons to be an uber bear in gold, despite the fact that we didn't really extend those games. We saw an inside week based on last week's range, so we stayed inside of last week's range, but not really any definitive move. And I think that right now gold remains very much neutral unless we can get a settle and sustain trade above 1350, or likewise a settle and sustain trade below 1330, possibly even 1325. But I think right now that's kind of the range we need to stay in, 1330 to 1350 and all as well. And if you look at what the dollar did today, well, gold was down $9. The dollar was up pretty high. It's made some efforts to push higher. I'm not necessarily sure it's because of positive dollar news as much as it might be liquidation of other currencies and kind of the selling of yen and euro and pound in order to facilitate higher dollar. But we're nearing the 91 handle in the dollar index, something we haven't done since January, and I think that could be key. You could start to see things snowball a little bit, but we've seen this before in the dollar where we get those brief moments of dollar strength and a kind of sigh of relief, and then very quickly it reverses. So right now I'm not going to hang my hat on the dollar continuing this trend until I see it, albeit we are starting to see minor rumblings of a stronger dollar. And lastly, let's look at positioning. The spec longs have been in control of that 1330 to 1350 range. We've seen it pretty much mirrored on top of each other. We see better selling up in the highs. We see better buying down near the lows. And they've kind of just kept it contained here while the market has given us only a few reasons to break outside of that range. One of them being the risks we saw last week. So I think that right now that as we see spec longs starting to liquidate, they are nearing their lowest levels of the year in holding. So if we see next week's levels come in even lower, we'll probably anticipate them to be buyers down near that 1330 level, somewhere we haven't spent a whole lot of time. So that could be what we're waiting for. Guys could be looking to sell the gold here, get out of their longs and reestablish on a lower trade. And right now we just haven't had that opportunity. Today's trade by the wayside, I think that we still need to push lower down towards 1330. So gold's still hovering in that neutral territory. We have GDP coming out next week. That could be influential only because of the way it may influence the Fed, which may influence the dollar, which may influence a lot of things, right? So I think that as we look at the dollar heading into next week, I think you're very neutral, waiting for that it moment, waiting for that big news, whether it comes geopolitically, whether it comes U.S. economically. And likewise, I think that there's a lot of potential for gold to see a breakout move, but right now still leaning towards the bullish side of that seesaw, but we haven't had anything yet as of today to push us there, still holding the range very neutral going into the weekend. This is Todd Colvin coming to you from the floor of the CME Group.